team for achieving these great results. It is worth pointing out that the current macro environment remains uncertain. I don't think I'm telling anyone anything people don't already know, especially with large purchases such as cars. And while we reduced prices considerably in early Q1, it's worth noting that our operating margin remains among the best in the industry. We've taken a view that pushing for higher volumes and a larger fleet is the right choice here versus a lower volume and higher margin. However, we expect our vehicles over time will be able to generate significant profit through autonomy. So we do believe we're laying the groundwork here, and then it's better to ship a large number of cars at a lower margin and subsequently harvest that margin in the future as we perfect autonomy. This is an extremely important point. Let's see, regarding the Cybertruck, we continue to build alpha versions of the Cybertruck on our pilot line for testing purposes. It's a great product, and we're completing the installation of the volume production line at Giga Texas, and we're anticipating having a delivery event, a great delivery event, probably in Q3. As with all new products, it'll follow an S curve of, so production starts out slow and then accelerates. So the Cybertruck is no different. So there's a tremendous amount of demand for the product, obviously. It is, in my view, a fantastic product, a Hall of Famer. But as with all new products, it takes time to get the manufacturing line going, and this is really a very radical product. It's not made in the way that other cars are made. So let's see. With regard to Megapack, we're making great progress. Our energy storage deployment reached nearly 4 gigawatt hours in Q1. It's by far the strongest quarter ever. And this growth was achieved thanks to the ongoing ramp at our Megafactory in Lathrop, California. There's still some way to go to reach the full run rate of 40 gigawatt hours per year. And then we additionally announced the start of a new Megafactory in Shanghai. So as we've expected, the stationary storage growth actually will significantly exceed the vehicle growth. Regarding autopilot and full self-driving, we've now crossed over 150 million miles driven by full self-driving beta, and this number is growing exponentially. This is a data advantage that really no one else has. Those who understand AI will understand the importance of data, of training data, and how fundamental that is to achieving an incredible outcome. So, we're also very focused on improving our neural net training capabilities, as is one of the main limiting factors of achieving full autonomy. So we're continuing to simultaneously make significant purchases of NVIDIA GPUs and also putting a lot of effort into Dojo, which we believe has the potential for an order of magnitude improvement in the cost of training. And Dojo also has the potential to become a sellable service that we would offer to other companies in the same way that Amazon Web Services, offers web services, even though it started out as a bookstore. So I really think that the Dojo potential is very significant. In conclusion, we're taking a view that we want to keep making and selling as many cars as we can. Despite this being an uncertain macro environment, this is a good time to increase our lead further, and we'll continue to invest in growth as fast as possible. Once again, I'd like to give a huge thanks to all Tesla employees worldwide for doing an incredible job again, and super appreciated.
Thank you very much. And Zach has some remarks as well.
Yeah, thanks, Martin.
I want to start by congratulating the Tesla team for record vehicle production and deliveries. And I also want to congratulate our energy storage team for record volumes as well. There's three main points I want to make. First, automotive gross margin and operating margin reduced sequentially, but as Elon mentioned, these remain at healthy levels. In particular, automotive gross margin was impacted by a few factors since our discussion on the last earnings call, which include additional action taken in the second half of the quarter to improve vehicle pricing, and one-time items, most notably warranty adjustments on older S and X vehicles, as well as increased deferred revenue for certain autopilot features as we transition technologies. Progress on vehicle cost reduction continued in Q1 with meaningful improvements on logistics and the beginnings of some commodity cost reductions starting to be realized. Per unit costs for Austin and Berlin improved as well, driven by record volumes. However, these factories still provide a margin headwind and will likely continue to do so until after we reach and stabilize at our intended volumes. Note that Q1 was our third quarter in our multi-quarter plan to move to a more regionally balanced mix of build and deliveries. As I've mentioned previously, this results in lower deliveries than production within a quarter due to a higher volume of cars in transit at the end of the quarter and has an associated impact on quarter-ending free cash flows. This was particularly prevalent in Q1 for S and X as we begin exporting cars for international deliveries. Second, our storage business is starting to take shape, and this is exciting to see after many years of investment and focus. This business is growing as a percentage of the company's revenue and reached its highest level yet in Q1, driven by an increasing rate of deliveries for our Megapack products. We are also making progress on storage profitability, generating our highest gross profit yet in the quarter. Third, I want to reiterate the philosophy by which we are operating the business this year. Our approach is to grow volumes as quickly as possible in both our vehicle and energy businesses.